Hey, good afternoon, everybody. And I know for some of you that may be in other parts of the country, good morning. I'm Ted Jenkin. I'm very excited in just a minute to bring on our guest, but I wanted to thank you for taking your time today. You know, part of what we've always tried to do at Oxygen Financial is be a source for getting really valuable information. And this is not only for those of you that are business owners, but also for individuals, and really trying to stay on the front edge of the business curve, because that's how you build your net worth. You know, you get ahead of what's happening with taxes, you get ahead of strategies to help your business to grow more top line revenue or bottom line profit. You get ahead of even digital tips and tricks. And I wanted to tell you before we get going today, everyone should write this one down. And the website's called Do Not Pay/travel. Now, I know a lot of you are busy executives and you're traveling a lot. And what this Autobot does, this is like the front end of artificial intelligence, is once you book your ticket, it will actually sift on an ongoing basis until you fly and actually reshop your ticket. And if it gets a better deal for you, it doesn't even charge you any money today because they're trying to grow your user base, and it will recredit your credit card with the money that you're owed. Most people don't realize that the 24 hours following your flight is usually when you get the best deal after you book the flight. And this Autobot knows the 60 or 70 loopholes to save you money. So pretty cool stuff. Yeah. DoNotPay.com/travel. Now, that being said, I'm really excited to bring on our guest today, Lara Hodgson, who is the co-founder, president, and CEO of the Now Corporation. And I will tell you, when you hear what she has to talk about today, I am blown away by the business that she's built. But I'm really, more importantly, I'm excited about how it's helping entrepreneurs run their business better. We struggle in many ways as business owners. Sometimes it's hiring the right talent. Sometimes it's figuring out strategies to get into different and newer marketplaces. But a lot of times it's about managing our cash flow. And Lara was born up in New York, but got raised here in Atlanta, did her undergrad at Georgia Tech, and really did amazing there. Was actually named one of the top students by the USA Today. Think about this, in the country while at Georgia Tech. But most importantly, she did her graduate work at the Harvard Business School. And you can imagine just how hard it is to get into the Harvard Business School. But she not only learned amazing things in there, but really one of the things in her bio, which I think is kind of cool to me, is she learned about an ability to assess risk and think creatively about ways to manage it. And I think when she talks about the business today, there's nothing that underscores it more than that line right there, which is how do you manage the risk in your company when it comes to accounts receivable, and be smarter about how to manage your cash flow so you can drive your top line revenue quicker and ultimately grow your company. So I'm really excited to have her on today. I'm going to turn it over to her now. She's got just an amazing presentation for you today. And thanks for joining us today. We're excited to have the program.
Yeah, thanks for having me. I'm going to see if I can get my slides pulled up here.
This is the fun part of technology.
This is the fun part of technology. All right. There we go. So hopefully you can see that. And thank you for the introduction. I have to say that I'm going to, as soon as we're done, go to the website on Do Not Pay, because with all my travel, that would be helpful. And it just made me think that not only should we talk about do not pay, but do not wait to get paid is really our theme today. So there you go. So what I wanted to talk about today is managing cash flow when your customers don't pay immediately. And I'm really going to do three things. I want to challenge the way that you think about cash flow and working capital, two words that we use all the time and we almost stop thinking about where they really come from. Number two, look at different causes of working capital problems. And then number three, talk about some of the solutions. So those are the three things we're going to do in the next few minutes. So first off, what is cash flow and what is working capital? Now, I know all the people on here that are financially sophisticated are rolling their eyes. Of course, we know what that is, but just, humor me for a second as we just go through the definition, because it does help us step back and really think about words that we use every day, but stop thinking about their real meaning. So cash flow is the money that is flowing in and out of your business in a given time, typically during the month. When we talk about working capital, we're talking about the capital that you use on your day-to-day operations. It's used sort of for your current needs and the ongoing work that you do every day. Now, if we go all the way back to years and years and years ago, most companies that sell to consumers would have not necessarily gotten paid when they sold a product. So think all the way back to like Little House on the Prairie days. You had merchants like in this picture, and if this woman came in to buy a bag of sugar or some of her groceries or even some linens, she would have done one of two things. She would have either handed over cash, or more than likely, she would have gotten credit. And that store owner would have given her credit. So she probably would have walked out of the store with her sack of sugar and not necessarily have paid. However, later that week or later that month, she might have come back in to pay her account. And if you go back even as recent as just 50 years ago, half of consumer credit was really funded by merchants. You may remember that. I remember my mother having a charge account at Rich's and a different account at Macy's and an account at the local grocery store and a tab at the local restaurant. So very often she would walk in and out of stores with the product and not necessarily pay right then and there. And that really constrained these merchants' ability to grow. So if you think back 50 years, there weren't large retailers. Most of them were small. They were mom and pops because the bulk of their money was really sitting with their customers. But fast forward to today, it's very different. When you walk out of the grocery store with your sack of sugar or whatever it is you're buying, you always pay for the product as you leave. You probably don't hand over cash. You probably hand over a credit card or swipe your phone or some sort of payment system. But when you do that, the merchant, the store owner, gets paid immediately. They don't wait to get paid. So when you swipe your card at Starbucks, they get paid that day, even though you're not going to pay your credit card bill for another 20 or 30 days. And if you shop online, same thing. The minute you place that order, you hand over a credit card number or some other payment system, and the merchant gets paid before they ever send you the good or service, which works very nicely. In fact, today, if you were to walk out of a retail store without paying for something, we call that stealing. That will earn you an orange jumpsuit and will put you in jail. So the days of walking out of a store with a product and not having paid changed over the last 50 years. However, many of us are in the world of business to business. We're not selling to consumers. We don't have a storefront. And we are still living in the black and white photo world of delivering our good or service and waiting to get paid, just like the merchant back in the Little House on the Prairie days. So more often than not, we pack up our good or we deliver our service and we send it off in a box or we deliver it to our client. And instead of actually taking a card or cash or some form of payment, instead, we send them an invoice that says things like net 30, net 60, net 90. And what we get in return is we get an account receivable. Now, I don't know about you, but taking an account receivable to your customer to buy something doesn't work. You can't really use it. You're left waiting. And unfortunately, net 30 doesn't even mean you get paid in 30 days. I will tell you that on average across the entire economy, a net 30 invoice typically gets paid in about 65 days. So what does that mean if your customer's asking for net 60 or net 90? Or what's becoming more and more common is net 120, which between you and me is consignment. I don't know how people even say that with a straight face. But that's the world that we as business to business companies are forced to live in. So how do we think about that? Well, at the end of the day, timing is everything. Getting your revenue, your payment immediately changes everything rather than having to wait 60 or 90 days. People like to say cash is king, but I always say that if cash is king, then flow must be queen, because my cash in your checking account is not very helpful at all. I need it in my own account. 10 years ago, I had started a company, which you see here on the right. It was called Nourish. It was a children's spill-proof bottled water product. And I was selling that product into small retailers, small distributors. For the most part, they handed me a credit card or a purchasing card, and everything worked fine. And then about a year into the business, I started selling larger orders into large national retailers, which as an entrepreneur, I thought I had bagged the big deal. I was finally growing and on this path to success. However, what I started to realize is my bigger and bigger customers were the ones that took longer and longer to pay. So I was sharing this, well, really, I was complaining about this to my friend Sarah Blakely, who many of you know from Spanx. And the comment that she said is, oh, well, you just have a working capital issue. Now, I'm an engineer by training. So when you say to me, I have a working capital issue, my response was, I don't want one of those. How do I get rid of it? And everyone told me, well, you should just go get a line of credit from your bank. Now, as an engineer, when someone gives you an answer that they didn't really think deeply about, I always question it, because the answer can't be the same for everybody. There's got to be a difference because businesses are all different. And so what I started to look at is, if I were to simplify the way a business works, and I know we're all different, but this is the way all businesses work. You sell your good or service and you get paid. You might take cash, which is rare. You more often than not get your payment by a check or an ACH or a wire. When that payment comes in, you use that money to run your business. That's operating your business. Some of that money, some of that cash will leave your business in the form of expenses. They could be operating expenses or they could be capital expenses. Hopefully, more than not, the cash stays in your business because you're going to use that to go sell the next product and repeat the cycle over and over. Now, when you have a working capital issue, what happens is that flow from left to right gets clogged up. It's like a clog in your drain, and really what you need is liquid Drano for your business. Up until now, what people have told us is the way to solve that blockage is to either go get a loan or a line of credit, but that's debt, and that's going to show up on your balance sheet, and it's going to ultimately constrain your ability to grow. Or they're going to tell you to go raise some more equity, but that is really expensive. And the last thing you want to use equity dollars for is funding the day-to-day operation of your business. So when you look at the debt and the equity on the top and the bottom, that's not solving the blockage. It's not solving the left to right flow. It's simply covering up the pain. It's sort of like my knee hurts, so I'm going to take some Advil. My knee doesn't hurt anymore, so I'm going to go for a run. My knee is actually still injured, but because I don't feel the pain, I actually make the problem worse. So what I decided to do was to really look at the left to right flow and peel back the onion and say, not just that I have a working capital issue, but what caused my working capital issue? Because if the cause is different, then perhaps the solution should be different. So one cause of a working capital issue is that your expenses have to go out faster than you can deliver your good or service. So for example, if I have to make a widget, it's possible that before I can ever make the widget and obviously get paid for it, I have to buy some equipment or I have to build a facility in order to deliver my good or service. Maybe I have to purchase raw inventory, raw materials to build up an inventory so that I can even make the widget before I send it to my customer and ultimately get paid. Now, in some cases, your supplier might give you credit. So if I have to buy the raw materials and my supplier agrees to let me pay them 60 days later, that might be okay. That could be a great solution because now I'm going to get the raw materials, make my widget, turn it into the product, sell it, get paid, and then I can turn around and pay my supplier. But if your supplier won't, or in most cases can't give you that credit, then you have a working capital issue. So the solutions that work well in this situation are, in fact, things like loans. You might be able to borrow money for that facility. you might be able to borrow money for your equipment, or you might be able to lease your equipment. You might be able to get a working capital, sort of a line of credit, to allow you to purchase the raw materials in the inventory and then wait to turn that into something that you can collect revenue on. Or, to be honest, if it is a large amount of capital expense, it might in fact be a good solution to raise some equity, because those are long-term dollars that are going to go into purchasing assets or building assets that have a long-term value for creating capacity. So the traditional solutions are not bad if the cause of your capital is of your working capital issue is that your suppliers are making you prepay. If that's the issue, then traditional solutions are in fact appropriate. However, there's a different cause of working capital solutions, and this is what I was facing with Nourish. It's not that I had to prepay. My vendors were willing to give me 60-day terms. It's that my customers were taking longer and longer to pay. Essentially, they were borrowing my money for free. Because when you send an invoice that says net something, you have made a free loan to your customers. If your accounts receivable is anything more than zero, then you have potentially this problem. And what we find is it may be that when you send the product or the service to your customer, it takes them time to process the invoice. It may not be that they're just holding the money intentionally, although usually they are. It may be that they simply have to approve the invoice, send it over to accounts payable. That takes some time. They might be in a different department, a different city. And so there's days in there when you're not getting paid because they're simply processing. There's also times when the customer might, in fact, demand extended terms. I had customers that would tell me, not ask, they would tell me that I needed to give them net 60 or net 90. One time someone asked me what I offered my customers, and I sort of laughed because it's not like I offered, they told me. Sometimes you hear the checks in the mail, and I don't know what it is about the Postal Service, but they seem to have the complete inability to find small business mailboxes. They can find my personal mailbox for a bill, but they can't find my business mailbox with a check. And so oftentimes, again, you've got customers that are delaying payment and using the float that they get from the mail to not have to pay you as fast as they should. And then the worst, Ted mentioned the issue with risk. The worst of all is that your customer's actually not going to pay. We've all had that. If you haven't yet, you just haven't had it yet. It's coming. But you will send a good or you'll deliver a service and you'll have a customer that for whatever reason will actually default. They may go out of business or they may just simply refuse to pay. If this is your issue, getting a line of credit, using factoring, all of those finance solutions are not the right solution because they're putting debt on your balance sheet, they're adding a liability, they're not really getting rid of the blockage, they're not accelerating your payment at all, they're simply covering up the pain. Instead, what you should do is either require a credit card for payment. If your customer will pay you with a card, you should take it, because it allows you to get paid immediately and have no liability on your balance sheet. Or you could require your customer to prepay you, to pay a deposit up front, or to pay upon delivery. However, in B2B, it is very often that they won't do that. They won't prepay and they won't use a credit card. If that's the case, there is finally a solution, and it's called the NOWaccount. NOWaccount allows you to get paid immediately in a way that feels like taking a credit card, even when your customer won't give you one. So think about it. When you walk into Starbucks and you offer your card for payment, Starbucks gets paid immediately. They haven't borrowed money, they haven't factored, they have no financing solution that adds a liability to their balance sheet. However, they get paid immediately for about a 3% fee. You still get your card, you have your card, and you're going to pay in 20 or 30 days. Both of you are happy because Starbucks has their money and they have no risk on you. If you don't pay your credit card bill, it's not their problem. In the B2B world, however, there has never been a solution until NOWaccount that does the same thing. With NOWaccount, if you sell to other businesses or governments and you'd like to get paid immediately, you deliver the good or service, send them an invoice. You put it on your NOWaccount and you get paid immediately minus a flat 3% merchant fee. So it feels exactly like you took a credit card. Your customer still gets the invoice. They're still going to pay when they feel like it. They're still going to make the check out to you, but they're going to mail it to a PO box or ACH it to an account that we control. So nothing changes for your customer. They contract the same way, procure the same way, manage accounts payable the same way. They don't actually on a day-to-day basis know that we exist. They, however, get all the free accounts payable they want, and you are not having to wait to get paid anymore. It feels like you took a credit card. So for the first time, you can aggressively take that big customer, hire more people, buy more inventory, grow your business. And in doing so, you probably will then be able to better access the lines of credit and the loans that you need to buy equipment or some of the other things that you need to increase capacity. So my 5 tips for you are, first and foremost, don't just take the assumption that you have a working capital issue as a foregone conclusion. Identify the cause. Is the cause that you have to prepay, or is the cause that your customer is taking longer to pay you? Number 2, look at the full ecosystem of players. Very often the solution is in your customers, your vendors, your partners. So if your customer will prepay, fantastic. If your supplier will give you more terms so that you can pay later, also take advantage of that. But if that doesn't work, you can also leverage a NOWaccount to enable yourself to get paid immediately, even if your customer needs longer to pay. Sometimes you can even use it to take advantage to not only get paid faster, but imagine using NOWaccount, getting paid immediately, and then turning around and taking buying discounts with your suppliers. So you can use it to benefit the entire ecosystem. Number 3, make sure you're using the right capital at the right time for the right use. There is no one type of capital that is a silver bullet to your business all the time for every need. There is no source of capital that solves all your needs. So if you're looking at a solution and they tell you that you can't use other solutions, don't walk, but run away, because you should be able to use multiple solutions at multiple times for those different uses. If you get that mismatched and you're not using the right capital at the right time for the right use, your business sadly becomes a hobby. We all have them. They cost a lot of money. They don't make money. So make sure you get that match right. Number 4, look at how you fund your company differently than how you run your company. So if you remember my little circles chart, the left to right flow, that's how you run your business. The debt and the equity, that's how you fund your business. Those are not the same thing. So be careful that you're not using debt and equity as a way to run your day-to-day business. That's when you need a transactional solution like using credit cards or taking and using a NOWaccount. And then number 5, make sure that when you look at the different options, you don't just look at the cost of capital, because that's just one small part. It's not only the cost of capital, but it's the cost of risk. Because, for example, if you have a line of credit and your customer ultimately doesn't pay, so you might have gotten a cheap cost of capital, but your cost of risk is still high.
Hey, Lara, we have a question now. You want to answer the questions now, or do you want to take them at the end?
We can take it now. It's just I can't see it, so you'll have to tell me what it is.
So here's the question. It says, is there a limit to the business owner on the amount of accounts receivable in the NOWaccount? So I guess, is there a cap on the NOWaccount?
Yeah, that's a great question. So when you start with us, we start out with a cap of $1 million at any one time. So what that means is over the course of the year, you could put through about $7 million worth of transactions. That's where you start. Once you've been with us for a few months and we're confident that you're using the tool correctly and that it's working, we do let that go up. So we have clients today that are using 3 and 4 and 5 million at a time, which if you multiply that by 7 means they're putting through anywhere from 20 to 30, $35 million of transactions through in a year. And that's the limit just for the immediate payment. As we grow, the limit will keep going up because we're just trying to manage the concentration risk so no one client has too much of the portfolio. So it's not a magic number, it's more of a percentage.
Got it. Good question. Really good question.
Yeah, great question.
All right, go ahead.
So, well, my last point is just make sure that you're looking at all of the costs, because a lot of times you'll look at something that may look like it's cheaper in terms of cost of capital, but if they don't also take away the risk and they don't also take away the administration and leave you flexibility, it may in fact be more expensive for your business. So make sure you look at the cost of capital, the cost of risk, the cost of administration, and the overall flexibility. And so those are my 5 tips. And at this point, I was going to open it up for questions anyway. So happy to do that.
One of the questions in here is how quickly do they get the funds once they sign up for a Now account? So I guess if they send it up and they start collecting some of their AR this way, how quickly does the money get into their operating account?
Right. So when you sign up, it takes a few days to get activated. It takes about 2 minutes to apply. You give us your business name, your business address, the state you're organized in, the year the company was formed, and the type of entity. With those 5 data points, we will determine if you qualify, and we can approve about the top 65% of businesses. What we do with that is we run it through what's called the Small Business Financial Exchange. Most people are not aware that you actually have a business score that's completely separate from your personal credit score, and it's not the DNB score that you're used to looking at. Once we have that and you're approved, you'll get the credentials to be able to log in and kind of set up your account. And usually within a few days, we can then get your account activated so you can start using it. In terms of how long it takes to get paid, it's as soon as you upload the invoice, and I'll tell you there's 2 different ways to do that. If you use QuickBooks Online, you can actually sync your Now account in your QuickBooks. Once you do that, you don't actually have to go to Now account, because when you're in your QuickBooks and you generate an invoice to a customer and you tag it as Now account, QuickBooks automatically sends us the invoice, we automatically ACH the funds, and we book the journal entry. If you don't use QuickBooks, then there's one extra step, which is you generate the invoice how you normally would, and then you still have to upload it to us. You can do that as a batch upload. You can do it one at a time. Once you upload the invoice, our merchant service agreement says that we will pay within 5 business days. We typically do it within 2. The only thing that slows it down is if there's an error on the invoice and the invoice doesn't match what you put when you logged it into your Now account. And I know that sounds silly, but it happens all the time. Someone uploads an invoice and maybe the remittance address is different or the terms are different from what they keyed into our system. If that happens, then it does take a day or so while we figure out what the discrepancy is. But as long as the invoice is uploaded and it's clean and it matches what you put in the system, then we typically pay within a couple of days.
Now, for those of you that may have some interest, and I think we're going to flash this up on the screen, you can always go to www.nowaccount.com/Oxygen Financial is a great way to know. And that way, they will know that, obviously you work with Oxygen Financial and you make sure you get taken care of. One question on here, which is an interesting one, is what happens if a vendor defaults? They don't make the payment.
Right. Yep. So it does happen. Obviously, it's not something we love, but that's what we're here for, right? Is the amount of customers who don't pay that we've protected our clients is astounding. So what happens is you put your transaction on Now account. You're going to get paid immediately. The customer's going to get the invoice, and we're going to wait. Now we know that a net 30 invoice is not going to get paid in 30 days. We know that customers are going to pay late, and we don't expect that to change. So we're not trying to change your customers' behavior. What we are going to do is the first week of every month, thousands of statements leave our office that go to your customers, but your name is at the top, not Now account. And it's simply going to show what's outstanding, 0 to 30, 31 to 60, 61 to 90, and 91 plus. We're going to send those statements every month until an invoice gets 90 days past due. So if it said net 30 on it, we're going to do that until we get to day 120. Now, most of the time, and you'll get alerts, so you'll know if a customer is getting 60 days past due, 90 days past due, so you'll know when it's getting close. You would still be reaching out to your customer, as you normally would, to check on the status of their payment. Now, the tone of your conversation is going to be very different because they don't know you've already been paid. So instead of you calling them when they're 90 days past due and saying, oh my gosh, I haven't made payroll, I need to get paid, you're going to have a very calm conversation, which is, I noticed you still haven't paid this invoice. We really need to get that paid. Can you tell me when that's going to be paid? And so most of the time there's been a communication, in which case we're fine. But if we do get to that 90 days past due and there is no sign that the company has any intention of paying, we're actually going to file a claim with our insurance company. We have a massive insurance policy behind us, and we're done at that point. However, the challenge is if you came in the next day and gave us another invoice with that customer, we're not going to take it. So the reason you still want to check in with the customer and encourage them to pay is not because you're panicked. You're not. You're off growing your business. But if we do get to that point, then until they do pay, it's going to be on a sort of a no-buy status, which means we wouldn't be able to take the next invoice with that customer. We can, of course, still take all the invoices with all your other customers, but in order for you to keep using it with that customer, they are going to eventually need to pay. If they don't and they default, that's our loss. That's not yours. So the nice thing is it allows you to not take, to basically offload that risk. Now, I'll share with you something that many of our clients do, which I think is brilliant. They will very often, if they get a purchase order or an RFP from a business they haven't worked with before, they will immediately go into their Now account and they will put in the customer and the amount, and they will ask us to pre-approve it. If we say no, which is rare, we've approved about 93% of the requests we've gotten. But if we do say no, they can still do business with that customer, but you know something you didn't know before. If we won't take it, there is a high likelihood that you're not going to get paid. And so if you still do business with them, I would recommend an upfront deposit or recommend that you force them to pay by credit card so that you don't have that risk. If we say we'll take it, you can now take that project on confidently knowing that you're going to get paid immediately.
Yeah, it's funny. I saw everyone on here, maybe not so funny. I saw a recruiting and staffing firm the other day that literally had $1 million in AR. And you just think about what that does to your business, that, yeah, the net 30 then turns into a net 90 and you got that capital just in space. I mean, this is such a good solution for businesses to solve that problem.
$1 million in AR, I mean, that's astounding because when you think about it, we think of it in terms of, people like to say DSO, right? Days sales outstanding. I always think of it in terms of years of earnings that are outstanding. Days sales, well, 30 days, 50 days, it doesn't sound bad. But when you turn that around and say, wait a minute, that AR is worth a couple of years of earnings. I mean, how are you ever supposed to grow when you're sitting on that amount of credit? And I'll tell you an interesting statistic. It's not interesting, it's scary and it's sad. Small businesses today, as you and I are chatting, are holding over 1.2 trillion with a T dollars of trade credit to their customers. That's more than all, if you added up all the credit of credit unions in the United States, it's not that much. So small businesses are actually the largest lender in the country, not financial institutions. And that's crazy.
Yeah, that's amazing stuff. Well, folks, again, for those of you that have an interest to look at this deeper in your business, just go to www.nowaccount.com/Oxygen Financial. It's obvious why Lara is a national speaker at many of these fintech conferences and conferences all across the country. Just an amazing business person and thinking about creating models like this. And this is what entrepreneurship is all about, is creating solutions that help people solve their problems. So if you do have that working capital question that she talked about today, or you have AR that's just sitting there that's stale, these are the kinds of conversations you want to be having. And look, we solely really appreciate you doing this for our clients today. This is just amazing stuff. It's what business owners need to be looking out there, because these kinds of solutions don't come across every day. This is a new one that's cutting edge in a new space, because you've always been able to take a credit card in the B2C world, but there's hardly ever been anything in that B2B world. And this could solve that problem.
Yeah. Well, my dream, so when I started the company, I'll be honest, I wasn't trying to help anybody but myself. It was completely selfish. And then everyone said to me, well, everyone has this problem. And I thought, that's crazy. Why do we all have this problem? So my dream is that we're going to eliminate accounts receivable from the US economy. It's a silly asset. It shouldn't exist. And it doesn't exist today in any shopping mall. So why should any of us wait to get paid? And what I want to do is that small business owners constantly say to me, well, I get paid on time. I get paid in about 30 days. 30 days is not on time. On time is I give you product, you give me money. And so we've got to get out of this mindset that it's normal to wait to get paid. It's not. We shouldn't have to do that.
Well, this is very cool stuff. I appreciate everybody joining us during lunchtime here, and for some of you maybe a little bit earlier across the country. But look, our goal here at Oxygen Financial always is to help you breathe easier about life. And the way we do that is to try and help bring you solutions, whether it ranges anywhere from figuring out how to save money on budget line items in your P&L, or saving money on taxes, or creating a smarter retirement plan. And solutions like these hopefully will put cash back in your pocket so you can grow your business faster and be able to make your company more valuable. So thanks again for doing the webinar for us today. We really appreciate it, and look forward to seeing all of you that were on the webinar today sometime soon for a meeting with us. And definitely feel free. I think the link is up on the screen. Feel free to click it, get engaged, and thanks so much for joining us today.
Thank you.